Oh, hi everyone, it's Susie again from Esoteric Trading Solutions. I'd just like to talk about initial coin offerings, the technology and the risks. Again, we're in the business of teaching people about crypto and financial markets. We're not brokers, we're not financial advisors. We just want people to learn properly in a balanced way, where there's no vested interest, and basically learning hopefully reduces your stress and also reduces you losing money. That's pretty much what we're about. We have a fairly low subscription in Aussie dollars, and when you convert that to US dollars, it's even cheaper per month. So I myself, I've been in markets since 1987. I've traded currency markets, fixed interest bond markets, corporate bond markets, equities. I was a stockbroker for many years. I was a debt broker. I was a fund manager trading international fixed interest and bonds, and I was a repo manager, mortgage-backed security person as well. I've done lots of different things, worked in corporates, worked in banks, fund managers and the like. And the last 4 years I've been doing crypto, which has been a lot of fun. And I love the crypto market because it's just so interesting in terms of the businesses and the technology. So no further ado, let's just go forward. I can't get rid of this bottom bit where it says page 2 and 10. Sorry, I'm still learning how to use this silly this recording thing. When we talk about initial coin offerings, you can look up the calendar for which ones are coming up, and there's quite a lot. If you look at that internet address, Coin Telegraph, quite a lot is coming up, and there's been heaps in the past, and there's a lot now, and in the future the supply of ICOs is increasing. I think up to date has been about 144 billion. The thing I do want to say is not every ICO is going to go up, and not every ICO is going to work. You're basically crowdfunding. In other words, you're basically putting up money for something that hasn't even been established. It's a startup business. They're establishing it with new technology, and it may work or it may not work. And obviously with any startup business, it takes time for that business to flourish and to grow, and for you to get some sort of return. I guess what concerns me is, with the initial ICOs, a lot of stuff's being ramped up, and then it, gets flogged down. And the reality is, if you're not getting out of the gate fast enough to sell it down, you're going to get caught with something that may eventually go to zero. And I don't think a lot of investors or traders are getting paid enough premium to go into some of these ICOs. Some of these ICOs I wouldn't touch pretty much with a barge pole. That's my personal opinion. A lot of these ICOs are based on Ethereum blockchain technology, which may be appropriate for the business or it may not be appropriate for the business. In other words, the technology itself may not fit the business industry, and we'll go over that a bit too. And the reality is, with startups, you've got startup risk, and some of these startups, you've got to remember, may have gone to the banks to try and get funding, or they may have gone through other finance methods, i.e., try to get debt or equity at the banks or the stock market, and they couldn't actually get that funding. So again, they've come to the ICO market to get that funding, and obviously, at the moment it's very easy for them to get that funding if you mention new technology. So again, you've got to be really buyer beware, because you may not be getting compensated for the new ICO or the risk that you're actually taking on. With Ethereum, as we know, it's got smart contracts. Bitcoin doesn't have them, so that's why Ethereum's appealed to the business community. A smart contract basically is something that's written in processing language or computer programming language, where effectively it's got all the terms and conditions of the buyer and seller within that contract, and essentially nothing gets done without those terms and conditions being done before there's the release of money or coins or whatever it might be. So that's pretty much why business community likes Ethereum. So as I said, this crowdfunding enables a platform, and you may be awarded with coins or tokens. What do we mean when we talk about blockchain? It's pretty much very quickly, it's a distributed ledger technology. So it's a distributed ledger technology, which means it's decentralized, it's not centralized, it's just a public ledger, like your debits and your credits and your transactions. The computers basically that are decentralized have nodes and computer software that pretty much create chains, and the chains are the transactions or blocks which add to the blockchain once they've been confirmed by the miners and the programmers and the developers of of that technology. So what it means is pretty much a transaction or a transaction or a record is done digitally, put into a public ledger, which is basically held in, say, 6 or 7 different computers, which are decentralized, and they each balance each other, to put it easily, to sort of try and bring that technology down to a basic level. These blocks are added to the blockchain, and it's really up to the miner of the currency to process those transactions. Now, the miner or mining, they will process those transactions for a fee, but it's up to those guys that manage the blockchain to transact and to process the transaction. But also there'll be 6 or 7 decentralized computers with nodes, and they'll balance against each other. So that's all done sort of instantaneous. Once these transactions are done, they can't be reversed. Pretty much there's no regulation from a central regulator like a government or ASIC or anything like that. These transactions are regulated by a peer, so it's peer-to-peer, programmers and developers, but certainly not governments. The thing with blockchain technology, if you understand it, particularly from the settlements perspective, it's almost instant. You don't need, reams of back office people to authorize a cash payment or a cash receipt or to press buttons like you do now, which is pretty much old technology with the banks. And it basically, eliminates middle office. So if blockchain does happen within the banks, particularly, you're going to see a lot of unemployment of people in banks. The no balance of transactions basically create no reconciliation process at all, because it reconciles within the technology itself against the different computers. So transactions are almost done instantaneously if we look at Ripple, and essentially the old settlements of having to confirm manually by people, say in Australia to the US or offshore, you've got time zone problems and everything else, that'll all be eliminated, and literally you'd be saving an incredible amount of time as well as an incredible cost, because you don't have to employ people to confirm transactions. So it's really going to change the way banking's done, the way a lot of business is done. The industries that are actually looking at blockchain at the moment are pretty much banks, fund managers, property companies, asset managers, investment managers. You get literally a lot of businesses that where this blockchain technology could easily be applied to. Government records, ownerships of different asset classes like collectibles, foreign exchange, that sort of thing. Finance companies, credit unions, IT companies. Again, it's all those sort of industries where they rely heavily on the settlement and operating processes of the business to actually transact. And it's businesses where there's high transactional activity, like stockbrokers, anyone where there's a lot of transactions in the business, and there's a lot of settlements and operating processes. So in Australia, for example, there's Swift and Austraclear. This blockchain technology could actually replace that quite quickly and efficiently, and get rid of lots of different people. I guess the thing is, what I do want to say is blockchain may not be right for the business model or the industry. It may not be appropriate to apply it. So in some businesses, for example, yes, you might be able to apply it to, say, medicine on the administration side, but you certainly can't apply the technology in terms of the working of, say, a hospital, at the people level, if you know what I'm trying to say. There are many projects out there that may not even be executable. People are actually putting money into ICOs, thinking that the projects are going to get off the ground, and those projects may not even get off the ground. I'll give you an example of this. You might say, yes, this is good coin or a good token, whatever. But, just to think about these things when you do invest in stuff. There's a new ICO out there called Tripoli. Again, it's taking on the telecommunications industry. And it basically says that if you go overseas anywhere, you can sign up to their mobile technology and pretty much use your SIM card anywhere in the world or any of the countries that they're actually in, and get global roaming. I don't know what it's like overseas, but certainly in Australia, if you travel overseas, data roaming is really expensive. Global data roaming costs a fortune. So, if I went overseas for 3 weeks, it'd probably cost me $600 Australian or something when I come back. But the thing is, when you look at Tripoli and their business model, the process, the technology can be applied, but the thing is, how practical is it? When you look at Tripoli, they're entering a highly regulated industry, being the telecom industry. The assumptions are that they're going to have strong growth, i.e., for example, 20% of clients are going to be converted to this new technology. Other assumption is that there's going to be high growth in these countries where they are, assuming that there's going to be lots of people travelling and lots of people spending money. Also, it assumes that they're going to get a client base really, really quickly, and that people are going to move over to their technology. Again, when you talk about the telecommunications area, a lot of people are on contracts with mobile phones. They may not be able to get out of their contracts. There's break-even clauses and everything. So, you've really got to look at that stuff. And again, there's nothing to say in the white paper for Tripoli. They don't talk about how they're actually going to get their clients. A 20%, 20% conversion rate is quite high in sales. I've been in sales, and 20% is pretty high for the first year. So you've got to assume, how they're going to do this. And also the revenue they're charging $3 US a day, which is pretty low. So again, the revenue line doesn't quite, outweigh. They've got to bring the revenue in. Does that really, is the revenue line, going to increase or be good compared to what they're charging on the ICO, the token or the coin itself? I'm not so sure. I get the feeling that, the initial CO, it's probably priced a little bit higher, a little bit rich. Even if you look at something like Napoleon, you can look at all different ICOs, and you've got to think about it this way. Is the business model practical? Is it going to make money? That's the first thing, and if it doesn't, and is it built on assumptions that are just stupid? Or, the assumptions aren't realistic, what are the risks involved and all that sort of thing. So, if we look at Napoleon, for example, it's based on the whole profitability of it. Yes, we use the technology, but it's based on the profitability of robot trading. So the robots have to make money before this coin or this token actually makes money. So another thing, ICOs coming out with no white paper or minimum details because they're not regulated, they're not audited. Again, if you look at the stockbroking industry where prospectuses have to come out, know your client, and the debt market, the bond market, there's very highly regulated prospectuses. They've got to tell you what they're doing with the money. They've got to put it in, a secure custodian account, for example, the money. Basically, everything's audited, everything's regulated. With the ICO market, it's basically consumer or buyer beware because nothing's regulated. There's nothing's audited. Effectively, an entrepreneur can come to the market, do an ICO, and literally put anything in the white paper, minimum details, or not even have a white paper. So, what I want to point out is, valuations are difficult. It's hard enough valuing a company that exists on the stock market in terms of shares, but valuing something to start up, and then you've got this risk of also the processing operational risk that's got to work as well, and the startup. I think that's hard enough. And also you've got to try and value the people on the project, the technical people, the IT people, let alone just the company itself. So, the valuation is pretty hard. And if you're trying to value a company, what then is going to be the value of the coin on ICO or the value of the token? I think that's the hardest thing, literally. And I just want you to keep that in mind. Going through very quickly, again, when we convert to new technology, you've got to put it in maybe a business that's not established or is established. So how hard is that going to be? The business may not get off the ground because of the assumptions and prospects. Again, regulators aren't there, but if they come in, again, who's going to be responsible for decentralization, security being hacked, private information, again, sensitive, blah, blah, blah. And also retail, does it have the skills to access the risks in startups? I suspect not. And also, will these coins be a mechanism of exchange? Not necessarily. Bitcoin was set up to be a peer-to-peer medium exchange, and a lot of these coins and tokens aren't. And again, people analyse ICOs in terms of picking a winning team on the IT side. Again, or the software, again, it's hard to pick a winning business, let alone to pick a winning team on the IT side. And what is the true intentions of the ICO? To me, this market at the moment, the ICO market, feels like the dot-com crash of 2000. The IT technology then where, you know, the whole market, and I was working in that market where basically there's a whole thing about old industry like BHP and, you know, Rio. That's all old industry. Let's get rid of that and get rid of the banks. So I was selling all those down and going to new IT companies, and, you know, those valuations went sky high, and then it all crashed down. So also this money is being used to develop their own products and again, not even set up. So I think you also have to ask yourself, what's the utility function of these ICOs? Is it practical? Is it necessary to change? Is it going to change? To me, there's a lot of hype in this market and people trying to cash in on it. And to me, it really outweighs where the industry really is. You've got scammers taking money and running because the money is going not into a custodian account or an escrow account where you've got safety and security. And the pricing of the ICO, the risks, you know, are very risky for the initial investor or the initial trader. There's no transparency, so money could go missing at any time, and the white papers, as I said, are unaudited. I hope you get something out of this. Thank you very much. Crypto markets, in my mind, are seriously treacherous. You need to learn before you enter the fray. Without knowledge, your risk of losing dollars is so much higher. So thanks very much. Again, as I said, I don't give advice. It's basically just for education only, and I hope you get something out of it. Cheers.